Hi, everyone. Alyssa Gorham and Justin Nielsen here with a look at the stock market today, where we saw another up day in the market. Maybe not quite as strong and powerful as what we saw yesterday, but very good progress that we are seeing, Justin, and a couple of long-term leader stocks to check in on.
Yeah, we'll take a look at EPAM, Cadence Design, and one that's not a long-term leader on IBD yet, but could be, and that is Zoetis.
Okay, great. Well, first, let's take a look at the major indexes. Here is the Nasdaq Composite with a gain today of about 0.6% by the end of the day. We also had the S&P 500 up 0.3%, the Dow up about 0.1%, and the Russell 2000 up 0.8%. So day three of the rally attempt for the Nasdaq and S&P 500, and another up day. It was a little quiet at the beginning,
Right.
maybe not quite so quiet by the end of the day, but I think very constructive.
Yeah, absolutely. And it just, this morning I was kind of saying on the IBD Live show, like, look, this doesn't require you making all or nothing bets. When we were talking about getting a little nervous as the market was coming in, that didn't mean that we had to sell everything once it came down below the 50-day moving average line. A lot of us were selling way well before that, maybe when it was hitting the 21-day line, or even selling some into strength. In the same token, now that we're showing a rally here, and there are setups, there are stocks that are looking like they are, breaking above downtrends, reclaiming buy points, and so on. There's a lot of opportunities out there, but again, don't feel like you have to rush out and put all your money to work because things are turning around. You may have sold some stuff and that stuff may be higher right now. That doesn't mean you have to be, just gnashing your teeth and saying, oh, I shouldn't have sold. There was a lot of weakness that was being shown. Now our outlook is, starting to change. We haven't gotten a follow-through day yet, but I will note that the Nasdaq Composite clearing its 21-day moving average line, that's another thing that just kind of lets me know, hey, this is something that's kind of turning a trend here. The S&P 500 has done the same thing, back above both its 50-day and 21-day moving average line. It cleared that yesterday. So you've got some strength in those two big indexes, and the Dow Jones Industrial Average. We were talking about that yesterday as possibly a follow-through day potential. Now, one thing with the follow-through day is, look, we haven't had that much of a correction. So you might say, well, do we really need it? But at this point, it would give us a little bit more extra conviction that we could get some more of a rally out of this.
That's right. Very well said, Justin. And let's also check in on growth stocks and how they fared today, up about 1.1%, so outpacing the broader market gains. And this is, again, after a lot of destruction, but good to see a bounce back continue today.
Yeah, and one thing that you just have to be aware of is kind of know where your strength is coming from. I was looking at what were some of the stronger sectors today, and XLC, which is in the communications, was one of them. Well, okay, what were the leading stocks in that sector? And it was Twitter. Well, Twitter, that looks pretty decimated. Facebook, or Meta, I guess I should say. That looks maybe a little bit better, but not great. So there is a lot of this bounce back in, some of the stocks that were really destroyed in this latest pullback. And you don't want to see those leading necessarily. But there are still plenty of other names that really held up fairly well. And we'll go over some of those with the long-term leaders.
That's right. Yeah, we're not just looking for any old stocks that are up big in price. We're putting that in context of what did the pullback look like? Where is it in relation to its moving averages? What has the volume been like on those pullbacks? All of those pieces, putting them together, in addition with the fundamental analysis too, can help improve our odds of success with creating those top-notch watch lists and making you feel a little bit more confident about the type of names that perhaps you're wading back into in this early rally.
Absolutely. Context matters.
Okay, and so speaking of high quality names setting up, let's take a look at a couple of stocks with some potential. So we have EPAM Systems here, which finished the day up about 18%. And out of the gate this morning, we saw a gap of about 10% on news that EPAM is being added to the S&P 500. So a huge outside week taking shape here, Justin, on some very heavy volume.
Right. So is it actionable now? Not necessarily, but here's what I wanted to talk about. If we go back to the daily, this is a stock that really held up fairly well. Now, the computer tech services certainly had some stocks in there that did look much worse. There's a lot of illiquid names in there, but EPAM, even though it did cross below its 50-day moving average line, it and you could say, hey, look, that last breakout did fail. If you had taken that step back, as you were doing, Allie, to that weekly chart, you would see that, hey, look, if this is something that you've been owning for a while, it's given you a lot of opportunities to purchase it. And now, with a long-term leader, we do handle them differently. Rather than saying necessarily, okay, a break of the 10-week line and we're out, we can use the 40-week moving average line, or we can even go a little bit further back and look at the monthly chart and take a look at that and say, okay, is the relative strength still in an uptrend, and that relative strength line is relative to the S&P 500. And EPAM really fit the bill in all of those. So I think that you could have made the argument that provided that you had an earlier entry, if you had bought at this last breakout that we were showing on the daily chart, then look, you have to still respect that 7% to 8% stop loss. But if you had the earlier entry, that's where you can give it room. And that's where you can get some really big gains out of these long-term leaders. You'll be surprised. They seem slow moving, but you'd be surprised that over time, how much they can return to you. And EPAM is just another great example of that.
Mm-hmm. And another factor that we look at for these long-term leaders is stability of earnings.
Yeah.
So earning stability of 3 here with EPAM, the lower the better with this rating, and a multi-year EPS growth rate of a pretty healthy 23% here. So healthy, steady earnings as well for something like this.
And it's no surprise that investors, when you own a piece of the company, you want profits, right? And the more stable, I guess, the easier it is to hold on to those. Now, one thing I am going to preface, we're going to go over a lot of long-term leaders today, but you don't necessarily want to just jam pack your portfolio full of long-term leaders. One of the reasons why is because, look, these can have drawdowns. And if you have a whole host of them and you're using things like the 40-week moving average line, that means your drawdowns are going to be bigger. Not everyone can stomach that. So really kind of know your own investment profile to determine if long-term leaders are right for you.
Yeah, that's right. And also, I want to mention Accenture ACN
Yes.
in the Computer Tech Services Group, fellow long-term leader. And we can flip on over to the daily chart. This is a stock that held up very well in the most recent downdraft, Justin.
Exactly. And so this is the kind of thing that I'm looking for right now. Hey, what things are showing higher relative strength? And Accenture, ticker symbol ACN, certainly fits the bill in that regard. And I'm glad you mentioned it earlier. It has those elements. It's got some strong earnings growth plus the stability with that earnings growth. And that's what you see on the monthly chart. Again, that nice long-term relative strength line that's outperforming. Now, not quite as steep in this case, but still the trend line is very much intact.
That's right. Well, now let's take a look at CDNS, Cadence Design Systems in the design software group. Had a little bit of a pullback of its own, which makes sense in the most recent downdraft. But not only do we have a trend line that it's poking above here on the daily, if we go to the weekly chart, we can see a nice upside reversal at that 10-week line. And again, these long-term leaders, we like buying them as close as possible to that 10-week line. Cadence Design is now about 6% above that level, but that's not crazy extended by any means.
Right, exactly. So yeah, pullbacks are really where it's at for these because, a lot of times at the breakouts, maybe you don't go up too much before you have another one of the pullbacks. And so that can be a little bit harder to manage, harder to get the cushion. Whereas, sometimes it's a little bit easier buying off the pullback to get that cushion. But here we have Cadence Design, and it's got all those elements, low earning stability, which means very stable in its earnings, a very healthy 24% annual EPS growth rate. And what I especially like about this one is how well that relative strength line held up during this latest downturn. We were talking about this today among the leaderboard and swing trader group. And, Chris was pointing out on the daily chart, hey, there's a lot of up and down action. And I think it was Ed that piped in, well, it's better than just down action, which is what we saw in a lot of the software companies. So at least it had some of that up. It was resisting the trend of the market, that was pulling a lot of things down.
Yeah, that's exactly right. And S&PS worth bringing up here as well. Yet another group here with similar action. And a quick look at the weekly chart, you can see kind of a similar theme here, Justin, with strong earnings growth, pretty stable. Monthly chart has that outperforming relative strength line as well.
Yeah, and semiconductors have been one of the stronger groups here, and both of these companies have a little bit of an edge in that semiconductor industry. They're providing some design that helps the chip makers. So, Synopsys, again, Ed Carson mentioned a while ago how it's in both the SMH VanEck Vectors Fund and the IGV software ETF. So it kind of fits both categories.
Yeah, at the intersection of software and chips. So
exactly.
Pretty good place to be. And now let's take a look at Zoetis ZTS in the medical sector. So poking above this 228 area today. And we had a gain of about 1.8%. And this is a recent breakout that we did not see have a round trip or a test at that prior buy point at all.
Yeah, not much of a pullback at all. I mean, the 21-day moving average line held the gains in this case, while a lot of the stocks were puncturing their 50-day moving average lines. So this is one that we're going to be considering for the long-term leaders list. If you go back to that weekly chart or even the monthly chart, one of the reasons why we hesitated on this one is because it did have the relative strength line kind of break that downtrend for a while and go sideways. And we really want to have at least outperformance versus the S&P 500. And so Zoetis wasn't showing that. But if this is a turner, a turn here, then this is one that we will absolutely consider as a long-term leader. And, just for people that aren't aware of it, it's in the medical ethical drugs group. This is actually a spinoff from Pfizer. So Pfizer, of course, has been in the news a lot. This is a spinoff. They're animal health, so it's vaccines, medications for animals, whether it's livestock. They've also gotten into domestic pets as well. So that's an area that has a lot of growth potential, as you can see with that EPS growth rate, annual EPS growth rate of 20% and very stable at 6%.
Now, this one is also about 6.5% above its 10-week line, but didn't come down to touch it. Does that bother you at all in terms of initiating a position in a long-term leader? Would you have wanted it to pull back a little bit more, or what do you think about watch list versus ready list with something like this?
I'm going to go with a watch list on this one right now. Again, I like the fact that it didn't really give up much, but since we do try and get those long-term leaders more on the pullback, you got to kind of wait for that to happen so that you can get that cushion and eventually start using the 40-week moving average line over the 10-week moving average line.
All right, well, a good one for the watch list. And also Google parent Alphabet, another one that we've been talking about lately, having those long-term leader qualities, a long-term leader that is pretty close to its 10-week line as well. So lots to choose from in that kind of area of the market, Justin.
And folks can look at the SMT video that you and Ken did yesterday, because Ken did cover Alphabet as he was going through a number of stocks that were looking good. And that one did have a little bit more of a pullback, breaking its downtrend. So another opportunity there that he covered.
Yep, that's exactly right. Okay, thank you, Justin. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So we definitely hope you join us, investors.com/IBD Live, for all the details, where I'm sure if the market can hold up, we will have more potentially actionable stocks to chat about. So looking forward to seeing you all there. And we'll see you right back here tomorrow after the close.